Stocks see a broad-based sell-off today as market extends losses. Mid and small caps bear the brunt. Utilities take a pounding. Even metals and energy see a big sell-off today.
British American Tobacco sells 3.5% stake in ITC through the block deal window. The stock jumps post the transaction as analysts see the dip as an attractive opportunity to buy.
Founder of Kotak Mahindra Bank, Uday Kotak, believes the market is nowhere near the bubble territory, even though there is some froth. He argues that there are enough checks and balances in the market today.
The foundations for India's chip ambitions were laid today with the groundbreaking of 3 semiconductor units having an outlay of rupees 1.26 lakh crores. Prime Minister Modi said the 21st century cannot be imagined without chips and that India aims to be a global power in semiconductors.
The government has notified the Uniform Pharma Marketing Code that bars all gifts to healthcare professionals and their families. It also holds the CEOs of pharma companies accountable for adherence to the code. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar and with me as always is my co-anchor Pavitra Parekh. Pavitra, afternoon. So market sell-off really continues and the pressure is building up. But I would say it was very close to slipping below the 22,000 levels. Right now has perked back slight bit, so recouped a little but still down 221 points when we talk about Nifty 50. Almost 1% cut on that particular index. So 22,116 levels. One must note that the entire month of March we have stayed afloat above the 22,000 levels and even touched the highest point above 22,500. So from there, now the market is seeing immense amount of pressure. Bank Nifty, that is performing slightly better than the key indices, less than 0.5% down at the moment, less than 200 points cut on Bank Nifty, but the mid-cap and the small-cap universe, that's taking the maximum amount of brunt today. Mid-cap index down 3% in trade at the moment, perked back a little bit from the low point of the trading session, but that's hardly any consolation, and that's really visible from the picture of advanced decline ratio. The market breadth has widened to the max, I would say, and advancing stocks are way lower. Handful of stocks really advancing compared to the decline. So a bleak and a weak day of trade, Pavitra, there.
Oh, absolutely. We should take, we should just mention the advanced decline ratio. It's 1:18. For every one stock that is advancing, you have 18 stocks in the red. That is the breadth of the market right now. This has never been about the large cap fall. This is all about what's going on in the broader markets. The mid cap index briefly did turn negative for the year as well. It has come off around 500 points from the low. So we're, for the year, at least back in the green. But this is a steep sell-off. The small cap index down around 4% for the year right now as well. It's an across-the-board sell-off, right? What's seeing the biggest cut come through is the high-flying PSUs. So a lot of those names will be up on your screen. By the way, the CPSE index, PSE index, today the index itself is down around 4.5%. If you take a look at some of those names, you have a lot of the railway companies also which saw big moves. So right now correcting, the likes of RVNL, RailTel, Jupiter Wagons, all of these seeing a big cut coming through. All of the real estate stocks that have run ahead of themselves, so names like Purvankara, DB Realty, Phoenix Mills seeing a sharp correction as well. The entire Adani group of stocks is down anywhere between 6 to 9% right now. And then you also have, some of these on the gaining side, you have some of the banks which are holding up a lot better. Of course, ITC today also providing some support. So that's what's really going on with the market right now. And with that, actually, like we were mentioning, the mid-cap index also turned negative for the year. But what are the contributing factors for this fall? Which are the stocks which have really been the top losers? We have Hormaz joining us with all of the details. Hormaz, over to you.
brutal sell-off, isn't it? And if there is some consolation, if there is any, that is, there is a slightly off the lowest point of the day, both mid and small cap indices. But small cap index, as you mentioned, is down for the third day in a row and is down 1,300 points in these 3 trading sessions. And if you take a look at the peak that it made on the 8th of February, from there, the index has now corrected almost 13%. If you take a look at the top losers on the small cap index, you'll see the likes of SJVN, Angel One, NBCC, Tata Teleservices, and Phenolics Cables, all of them having corrected anywhere between 25 to 30% from the 8th of February, which is when the small cap index made its top. But if you take a look on a standalone basis from where the stocks made their respective 52-week highs, the correction looks even brutal. And if you take a look at SJVN, that stock is corrected almost 40%. Same is the case with Angel One. NBCC is also down 37%, and stocks like Suzlon and Phenolics Cables also correcting anywhere between 25 to 30% from their respective 52-week highs. That goes for the small cap index. Even for the mid cap index, that turned negative for the year for a brief period of time. It still continues to hover around those levels itself, and it's now down 6.5% from that peak that it made from almost near 50,000 levels. Now it is fighting to hold on to levels of 46,000. If we take a look at the top losers there, you have the likes of Yes Bank, Z Entertainment, Paytm, IRFC, Patanjali Foods, all of them correcting anywhere between 20 to 30% from the 8th of February, which is also when the mid-cap index had made that high of its own. And from there, if you take a look at the respective stocks from where they had made their peaks, you say Yes Bank has corrected over 35%, Paytm is down 65%, and Z Entertainment has halved from the peak of around 300 rupees that it made, and IRFC and Aditya Birla Fashion also correcting between 20 to 25%. No signs of relief whatsoever in the broader markets. The pain continues as we speak.
That's right. No sign of let up in the market at the moment, and the pressure really continues. Thanks, Hormaz, for getting us a detailed account of the stock fall that we have seen and the biggest losers and the pressure building up there. Now, veteran banker Uday Kotak, he says that the Indian market is not in a risky territory. And speaking at the SEBI NISM research conference, he acknowledges that there may be a little froth, but things are not out of control in the market. Listen in.
That I believe at this stage, we are nowhere near that risk. And there are enough checks and balances in our system today to compare ourselves in serious bubble territory. There may be early froth, as if I can use the phrase from what you said a few days ago, but I would say that it is still froth, a little bubbly, but not out of control.
All right, some froth, but not out of control. That is the word coming in from Uday Kotak. By the way, like we're just going to talk about ITC as well, because that is one stock which is really holding up in spite of what's going on with the rest of the market. This stock is holding up with a 5% gain. When we started off, it was even higher. But, this is, of course, after that large trade that took place in the stock. On the back of that, by the way, you have the FMCG index, which is the only sectoral index which is in the green as well. But we were talking about ITC, which, like I mentioned, is the only outlier today in terms of, the big move that we're seeing, and it is the top gain on the Nifty as well. After British American Tobacco, a long-term strategic investor in the company, sold 3.5% stake via the block deal window. So Mangalam is here to tell us more about this. Mangalam.
Well, ITC is the top gainer on the index today, and there are 3 important reasons why. One is the supply overhang from British American Tobacco goes away. The second one is there was strong demand for the paper that they were, selling almost $3 billion, and the demand for that was a lot more. And third, there has been underperformance of the stock before that, and as a result of which there was value available in an otherwise wobbly market. The street was chasing that. So let's discuss all these 3 reasons. The first one, BAT has gone ahead and sold 3.5% stake in the company. This is a deal worth nearly $3 billion, and they had been looking to offload this stake. They had told the analysts as well that they will hold up to 25% stake in the company. Now that they've sold the stake, they're remaining with around 25.5% stake in ITC, and on that as well, there is a 180-day lock-in period. So the supply overhang has gone, and that is the reason why the stock is up. The second one, there is strong demand for that. $3 billion worth equity was traded in the block window today. When does that happen? When the discount does not exceed 1% of the previous closing price. The offer was made up to a 5% discount, but such was the demand that, the deal took place at 400 rupees 40 paise itself, which was a 1% discount to yesterday's closing price. And there have been, higher than estimated buyers for, or higher than expected buyers for this block itself. And that brings us to the third question, the valuation. ITC at the start of this year was trading at around 26 times. The stock was underperforming, started to trade at around 21 times. And after this stake sale overhang is out, a lot of the brokerages believe that there is case for the outperformance of the stock to continue. And as a result of which, we've got upgrades coming in from both CLSA and HSBC. At the same time, Morgan Stanley believes that favorable tax environment and rising contribution of non-tobacco business should keep the stock steady and in good hands.
All right, Mangalam, thanks so much for giving us all those details. The large trade in an otherwise weak market, ITC, standing tall because of the overhang lifting of the supply concerns going forward. All right, moving on then, Prime Minister Narendra Modi inaugurated 3 semicon facilities today under the modified scheme for setting up semiconductor fabs in the country. Now, Tata Electronics PSMC semiconductor fab in Dholera in the state of Gujarat, Tata Semiconductor Assembly and Test ATMP unit in the state of Assam, and CG Power ATMC unit in Gujarat. Let's listen in.
साथियों, दुनिया के बस कुछ देश ही आज सेमीकंडक्टर्स की मैन्युफैक्चरिंग कर रहे हैं और कोरोना ने हमें ये सबक दिया है कि दुनिया को एक रिलायबल और रेजिलिएंट सपोर्ट सप्लाई चेन की सख्त जरूरत है। भारत इसमें एक बहुत बड़ी भूमिका निभाने के लिए तत्पर है। आने वाले समय में हम सेमीकंडक्टर सेक्टर से जुड़े प्रोडक्ट्स का कॉमर्शियल प्रोडक्शन करेंगे। वो दिन दूर नहीं जब भारत इसमें भी एक ग्लोबल पावर बनेगा।
All right, that is Prime Minister Modi laying out India's big ambitions as far as becoming a power for semiconductors go. But the fabrication facility at the Dholera Special Investment Region will be set up by Tata Electronics under the modified scheme for setting up semiconductor fabs in India. With a total investment of over 91,000 crore rupees, this will be the first commercial semiconductor or fab in the country. Listen in to what N. Chandrasekharan, chairman of Tata Sons, had to say about this facility.
I think it will create lots of jobs, because this is only the start. There will be expansion. So as I said in my speech, at least we are looking at 50,000 jobs here, and at least 20 to 25,000 jobs in Assam. The most important thing is to produce and create the facility which is world class. We are also trying to see how we can use AI so that it becomes a very, very advanced fab here, and also the assembly unit in Assam.
All right, momentous day there on 3 counts, that is self-reliance on semiconductor capabilities in the country, capital expenditure and job creation. So keep an eye out on these developments. With that, we'll slip into a short breather on Business Lunch. But remember, government has notified the Uniform Pharma Marketing Code that bars all gifts to the healthcare professionals. We get you more details on this right after a short break.
Hey guys, welcome back. You're still tuned into Business Lunch. The government has notified the Uniform Pharma Marketing Code that bars all gifts to healthcare professionals and their families as well. It will also hold CEOs of pharma companies accountable for adherence to the code. Timsi joins us to take us through all of the details on this one. Timsi.
Well, yes, as you rightly mentioned, the government notified Uniform Code for Pharmaceutical Marketing Practices, UCPMP 2024, last evening. The code clearly says that no gifts should be offered or provided for personal benefit of any healthcare professional, family members, by any pharma company, their agents, distributors, wholesalers or retailers. It also says that the pharma companies and representatives should not extend travel facilities inside or outside the country, including via rail, air, ship, cruise, tickets, paid for vacations, etc. to healthcare professionals or family members or who are attending either conferences, seminars, workshops, etc., unless the person is a speaker at that particular event. Pharma companies or representatives should not extend hospitality like hotel stay, expensive cuisine, resort accommodation, etc., to, again, these healthcare professionals or their family members, again, unless the person is a speaker. The code also says that the pharma company representatives should not pay cash or monetary grant to any healthcare professional or their family member. When it comes to the complaints, the code says that the complaints of violation of the code will be handled by Ethics Committee for Pharma Marketing Practices in each association, and each of the pharma company has to be part of an association. The Ethics Committee will be headed by the association's Chief Executive Officer and should have a composition of 3 to 5 members, which will be approved by the board of the association and should be prominently placed on the website of the association. Not just this, the CEOs of the pharma companies will be held responsible for adherence to the code. The code says that CEO of pharma company to be responsible for adherence to the code, a self-declaration shall be submitted by the executive head of pharma company within 2 months of the end of every financial year to the association. And that self-declaration is an annexure that is also a prescribed format that the code says. It also says that the self-declaration will be uploaded on the association's website or directly on the UCPMP portal of the pharmaceutical departments. Not just this, when it comes to free samples of drugs, it says that the free samples of drugs shall not be supplied to any person who is not qualified to prescribe such a product. Each company should maintain details of such products with the product name, the doctor's name, the quantity of the samples given, date of supply of free samples to healthcare practitioners, and the monetary value of the samples so distributed should not exceed 2% of the domestic sales of the company per year. So all this packed in a crisp code, that's what this new code talks about. Let's see how soon the pharma companies adhere to the code.
All right, MC, very, very clear messaging coming in from the government to the pharma professionals in this particular code. Now, moving on to another important news development for today, as directed by the Apex Court, Supreme Court. Well, the SBI has submitted all the electoral bond details to the Election Commission of India. We have now received the details of SBI's compliance affidavit. That's what they said. Ashmit Kumar joins us now with all the details of this development. Ashmit, tell us. Ashmit, if you can hear me, tell us about the details and what SBI has submitted finally after being directed by the Supreme Court.
Well, we understand that the State Bank of India has filed a compliance affidavit before the top court. Here, this has been signed by Dinesh Khare himself. As a part of this compliance affidavit, the SBI very clearly points out that there are two separate silos of information available with them. The number one silo is with respect to KYC of donors. The other silo is with respect to redemption information by political parties, date of encashment, denominations, and the parties to which these bonds were intended for. These two silos of information have now been shared by the State Bank of India with the Election Commission. In compliance with the Supreme Court directions, this was done before the end of the business day yesterday, which is in compliance with the Supreme Court direction. Supreme Court, of course, had warned of contempt action. A couple of aspects to bear in mind. There is no matching done between the two silos. So which electoral bond was intended for which political party, that information is not accessible, but the two sets of information shared with the Election Commission. Also importantly, the SBI clarifying that there were as many as 22,200 bonds, almost 22,200 of them. Of them, about 200 were not encashed. Those proceeds were then sent to the PM fund. What's important now is that the focus now shifts to the Election Commission. 15th of March is when the Election Commission is bound by the Apex Court order for publishing this information. And not just that, Election Commission is also required to publish information that it's secured from political parties with respect to donor-wise bonds. So that is something that is awaited. The focus clearly on the Election Commission for publishing this information as per Supreme Court directions.
All right, Ashmit, thanks a lot for bringing us all of those details. With that, it is time for a short break, but there's lots more news and market action on the other side.
Welcome back. You're watching Business Lunch, and markets have dipped further. So keep an eye out on the weakness in the market and the pressure building at this point. It's now time to shine a spotlight on the backbone of our economy, a celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code now and be part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight. That's all in Business Lunch. Mid-Cap Radar comes up right next.